Ladies and gentlemen, good afternoon. My name is Lambros Papaeconomou. I am the US correspondent for Lloyd's List based in New York, and I am your today's host. We have with us today Mr. Aristides Pittas. He is the Chairman and Chief Executive Officer of Euroseas, and he will talk to us about the company's spin-off of its dry bulk fleet into a separate listed company called EuroDry. Mr. Pittas, welcome to New York, welcome to Capital Link.
Thank you, Lambro.
I would like to get straight into the subject of the spin-off. You announced that your company will be splitting its dry bulk fleet into a separate entity called EuroDry. So once the spin-off is done, you will have two publicly listed entities. One will be a pure play feeder container ship company, and the other a pure play dry cargo company. Can you tell us why you made the decision now?
Yes, when we started off in 2007, the markets didn't really know, the shipping markets in the US were at a nascent stage. They didn't really know the differences between the various types of ships. But the markets have evolved. There are investors who understand the business, and today investors want to either hold dry bulk companies or container companies or tanker companies. They want to have pure play companies. We have seen this develop in the fact that our own share has traded at a very significant discount to its NAV the last few years. So we were waiting for the right time to spin off the dry bulk from the container company and have the product that the various investors want to see. And having overcome the very difficult period that we had up till a year ago, dry bulk up to 2 years ago, containers up to last year, we felt that now is the time to start playing offensively and separate the two companies and start growing the two companies, as we see that the next 2 or 3 years could be quite good years for shipping.
So in other words, you are willing to give up the benefit of operating a mixed fleet, which one can say it's beneficial in a down market, for the upside potential of having two pure plays when there is a pending market recovery in the two markets.
Yes, I think that's very correctly said. We've monitored that this is the situation. We are always conservative, so that's how we managed to survive this downturn that we had without having to issue dilutive equity or risk bankruptcy as some others. But the result was that we became smaller and smaller, trying to survive and to keep the company and not get it diluted. Now is the time to go offensive, and as we had seen the opportunity back in 2005 and decided to go public, now we see the opportunity to do something again big and grow the company, yes.
And there's something to be said for being public for more than 12 years and having survived some of the most vicious cycles that we have seen. Now, you made a comment about the share price's discount to NAV, and I presume that, is it fair to presume that another rationale for splitting the two companies is to try to narrow or perhaps even eliminate the discount to NAV?
Obviously, you're right. This is the first effect that I think that we will see from this split. The first effect is that we will increase shareholder value to where we think it ought to be by improving the valuation on both companies. So this is just the first step. First, we get to where we ought to be, to the valuation that we ought to be, and then we continue and grow the companies further. And we're prepared to do this by finding others, merging, cooperating, growing the fleets, because one thing that you have to have in these markets, if you're playing the capital markets, is you have to have a certain size. You do not need to be huge, but you have to have a certain size so that you can attract other kinds of investors, institutional investors. Obviously, this is not our target group at this point.
Is it fair to say that your target group, at least at the beginning, is a deep value investor who will see the potential of capturing, you know, the disconnect, if you like, between what the intrinsic value of your company is and where the share trades today?
I think so. I think that you know, smaller investors, retail investors, deep value investors, small institutional companies can look into us and say, hey, these guys have a lower price to NAV, a lower EV to EBITDA, low leverage. Why not? Why not invest there? And I think that this is something that will happen over the next few months.
Your company has a net asset value of a little over $60 million.
Mm-hmm.
And assuming that you get there, assuming that the combined market cap of the two companies reaches that $60 to $70 million level, the question is, where do you go from there? How far are you willing to grow the company? And do you have the capacity to grow it, you know, as a company, regarding personnel? And are you willing to accept a smaller shareholding in the bigger company? Right now, if I am not mistaken, you own approximately 40% of shares outstanding, and of course that shareholding is going to go down if the company starts growing. What are your thoughts?
That is not a concern of ours. Yes, we own about 40%, my combined family, of Euroseas currently, and we will own the same percentages after the split, mm-hmm. which is to become effective on the fully effective on the 31st of May. But we are prepared to take this shareholding down. We have a good management team that has been there for many, many years, about 30 years. This organization has been running ships, the last 12 years as a public entity. So we have the expertise, we have the capacity. We cannot do it alone. We are looking at others. We are looking at other companies that might want to combine with us in order to grow the company further. We have that ambition.
As you should, and as you can see from what is going on in capital markets and shipping lately, there are a lot of companies that are going down the route of merging with bigger entities. Mm-hmm. And what is different now than what it was different a few years ago is that they are accepting shares instead of only willing to sell their ships for cash. And in a way, that's the essence of capital markets.
We had looked at deals even previously. The biggest problem was that we were a mixed fleet. The second biggest problem was that whenever we reached some kind of understanding on how we should grow and we could manage the fleets, we had the issue of valuation because we were trading significantly below our NAV. And obviously we were not going to do deals below NAV. But when you're trading there, I think there are only advantages by merging companies. So, or if the others are willing to accept NAV as to NAV. So I think this is something that will happen. I'm quite optimistic because both markets seem to be doing well, dry bulk and container. Mm-hmm. And I think the expectations are that as long as the world continues to grow at a very high pace, which it is at this point in time, and every analyst is predicting that, we will have global GDP growth of 3.9% this year and next year, and maybe 3.8 in 2020. I think that this is the opportunity to go ahead and do this.
I think so, and in addition to a very good demand story, also on the other end, the supply is the supply side of the equation looks more favorable.
The supply side
today.
of the equation today is as favorable as can be. The order books, both in dry bulk and in container, are in the region of 10%. This is extremely low order books historically, and coupled with a strong demand, I think we have a big opportunity to enjoy a few good years.
I want to ask you a question that may be a little controversial, but some of the companies that agreed to merge with larger entities, like for example Quintana or Songa or Agustea Shipping, these are traditional shipping companies that basically agreed to be the seller instead of being the buyer. So in this game of consolidation, which is probably needed in a very fragmented industry, are you willing to see yourself only as a buyer or also potential as a seller?
No, we're not looking at this time to exit the markets by selling our companies. This is not what we're looking at. We're looking to be part of a bigger entity that will grow into something which is providing good returns for its investors, enjoys a good reputation worldwide, and is there to stay, in good and bad times. We are not an aggressive bomb that's going to go in there, lever as much as we can, get the returns that we can immediately, and then we are a long-term player. My family has been in shipping for 150 years. We will continue to be in shipping.
Mr. Pittas, thank you very much for this clarification, because it's to make a confession, we need more people who have the expertise and we have the ethos to be in this industry and promote the good side of shipping. We have a couple of regulatory changes happening in our industry. One is already happening. It has to do with ballast water management treatment. The other is with the new IMO regulations. How are you preparing for these two changes?
Well, firstly, the ballast water management systems, this have come to be. It has taken the industry a long time to adopt it and to agree on it. And now there are pure regulations, clean regulations of by when you have to install that. And we are proceeding with that. All our new buildings had it from the beginning, obviously, and our second-hand vessels, we're going to be installing the ballast water system when they are due. So that is already done. It's no more something for the future, it's happening. The bigger question mark is what happens after 2020, when we have the new regulations for high sulfur content fuel. And that is going to shock the industry a little bit. I believe that at the end of the day, because the solutions are very few, right? Either you turn to burning fuel which is low sulfur, with low sulfur content, or you continue burning high sulfur content fuel, but you put scrubbers, or more for the future, I think, you turn to LNG and other types of fuel. 95% of the industry is not going to put on scrubbers. Scrubbers have the problems of their own. They might offer some fantastic opportunity for a couple of years, but I'm confident that the industry will adapt and will provide the fuel that the industry needs. So eventually we will all be burning low sulfur fuel, and the refineries will be producing that. LNG is a very interesting proposal, and I think it has possibly a future, but it will take some time till we have LNG at the right ports, till we have enough LNG fitted vessels. You need to have huge tanks to put the LNG. So it's something that we will start seeing, I think, with larger, bigger ships initially that are being built, but it's something that will take some time.
There needs to be an infrastructure built
Yes.
in key bunkering ports.
Yes,
But
yes.
this is something to monitor.
But you will first see that happening with the very big container ships, maybe with the very big dry bulk vessels, and it will spill off to the smaller ships later, because the smaller ships go to all these different ports, they have to have the bunkers available.
Just for the record, because I want to clarify on the new company that will be spun off from Euroseas, EuroDry, that will own 6 dry bulk carriers. 3 of them have been ordered and built according to Euro specifications, and of course they have pre-installed ballast water management.
Correct. They are eco vessels, they have pre-installed the ballast water management systems. The other 3, we are going to install the ballast water systems in their future dry dockings.
And your target size is the Ultramax, Panamax, Kamsarmax size of the market. You do not own right now any Capes?
We do not own Capes, and I don't think that we will own Capes. Capes are extremely volatile and depending only on one cargo, and there are enough big companies there that in that market. I don't think we want to be in that market. We don't. Shipping is a very risky business. We don't want to make it ever so risky by getting into these high capital intensive ships that can earn very little money in a poor market, and we leave that to others. We concentrate on Supramaxes up to Kamsarmaxes.
Before I ask you for your closing statement, I want to touch upon one issue that is that raises some eyebrows in the industry, that has to do with corporate governance. The 2 companies that you have will have separate boards, and both of them are majority independent members. Is that correct?
Correct. Initially we will have the same people on each board, because it makes economies of scale, let's say. But with the intention of growing, this obviously will change. But we like to adhere to good corporate management practices, independent boards, no buying and selling from private interests to the public companies and things like that. We like to do everything at arm's length, and I think that we have proven over the last 12 years that we've been public that we are a company that does not do these kind of transactions.
This is very good. I would like to give you an opportunity to make a closing statement. You are going to have 2 companies. You are going to be very busy. What is the message that you would like to give to a potential investor, either in Euroseas, that now will be a pure container play, or EuroDry, that will be a pure dry bulk play?
Well, I want to say to our listeners here, firstly, that Euroseas will be the only container company in the feeder sector that is listed in the US public markets. All the other container companies that are listed have big vessels, long charters. We have spot, short-term charters in a rising market. We are the only such listed entity at this point in time. So I think this is a very nice opportunity for investors to participate in that market. On the dry bulk sector, we have a very efficient fleet of good vessels running very efficiently through the expertise that we have accumulated over the years, and this is a platform that we will grow, hopefully with like-size vessels into the near future.
Mr. Pittas, this is going to be a very busy period for shipping and a very busy period for capital markets, and I wish you best of luck, and you are going to be very busy.
Thank you very much, Lambros. Thank you very much.